Hey, what's up, guys? Rolling Wolf here. Hope everyone's having a good weekend. I just wanted to get into a trade recap from last week. I've been getting quite a few requests lately for some more intraday long setups and had a couple decent ones, so hopefully you'll take something from it. I think there's a couple decent lessons there. But as for the month of September, it was my best month yet to date. Culminating Friday, I made about $13,000 or so, putting me at somewhere around $70,000 for last month, which is mind-blowing. But things are heating up, and after a slow August, the markets are really strong right now. There's been some really strong moves with HMNY, IZEA, ITUS, and the list goes on and on from last month. So it's a really good opportunity to make some good profits right now in the markets, and hopefully the good times will continue. It could all change tomorrow, but we'll see what happens tomorrow when we get into the market open. So anyways, the trade I wanted to get into from last week was AMMA, and like I said, it was a decent intraday long setup. Wasn't perfect, but I'll get into the chart for you, and we'll see what you can take from it. So here's the daily chart for AMMA, and forgive me, my baby's crying in the background, and she'll be fine. It's kind of difficult to squeeze these in sometimes with the children, but anyways, here's AMMA. This is the entire chart history, actually, because it only started trading back in October of last year, and you can see here it got as high as 550, and since then it's been fading on super low volume. You can see here it's very thinly traded, very liquid, and the most volume it had done up until this last week was about 900,000 back in July. But other than that, nothing. This was the day I was trading this big green candle here, and you can see it did 9 million in volume, which completely eclipsed anything it had done in the past. And the reason for that was they had announced pre-market on Thursday that they acquired Victory Fighting Championship, which is another MMA company. And obviously the stock reacted quite favorably. It went from about 135 to just over 3 at its highest point. So really nice move. And let's get into the minute chart so we can kind of get a better picture. So here's the minute chart. And you can see they released news pre-market, and it created this nice big morning spike from the 130s to 215. And I actually lost a little bit on this move trying to dip by, not dip by, but buy this first pullback here. And I don't chase morning spikes. And in general, especially lately, I haven't been trading in the first 5 or 10 minutes of the day. I like to see things settle down a little bit because the first 5 minutes are so volatile. You have the open orders from the day before. You have a bunch of people eager to jump in. So it's a little unpredictable. And you can see it spiked to 215. I tried buying here at 180 after it pulled back to 173. That's a strategy I will use. I will try to buy the first pullback sometimes, because a lot of times you'll see a pullback and then you'll see it rip through that initial high and keep on going. Sorry, 1 second. I gotta take a break and grab my baby girl. Sorry about that. Anyways, so I tried buying this pullback at 180, and I was risking off 173, which was the low of the pullback. And that's one of the reasons I like buying pullbacks as opposed to chasing these morning spikes. Is it gives me better risk reward, and it gives me at least a defined risk reward, because if I'm chasing this spike, I don't know where I'm going to be risking off of. There's no major support level, especially on a chart that's fairly new and that has done no major volume in the past. And so I got in at 180. I only grabbed 2,000 shares, and we did get it up to 2, but it got stuffed there. And I ended up cutting when it broke down below 173, because that was my risk. And it ended up only getting down to 163. And at this point, I put it on the back burner. I wasn't sure if this was the for real bottom. It could have easily tried again, failed, and then just faded all day. And this midday volume after this next attempt up here, which happened to bottom out at 170, so it did make a higher low. But after this higher low, the volume faded, and most of the time when you see this fading volume and a spike like this was up over 100% on the day, and a pullback that's pretty drastic, followed by fading volume, most of the time you'll see it kind of fade off. In this case, on the 1 minute chart, it's kind of hard to get a grip on the price action here and what's going on because the volume was so low. You know, there are a bunch of candles on the 1 minute chart that literally had no volume whatsoever, maybe a couple hundred shares or something like that. But I ended up taking a position, 5,000 shares, a pretty moderate position, at 177 on this candle here. And once we get into midday, and particularly when there's a chart like this with fading volume, I like to put the 5 minute chart up as well, which I do into the afternoons. And if it's a multi-day run, I will throw up maybe the 15-minute chart or the 30-minute chart to get a sense of the entire move, and if it's the front side or back side. So on the 5 minute chart, it's much more clear. At least it was for me when I was watching at the time. And you can see that this is the exact same time frame. These 5 minutes right here is this 5 minute candle here. And on the 5 minute chart, what I saw was ramping action. It was actually low volume, but it was actually ramping upwards towards this resistance point in the low 180s or so. And so it was forming a wedge, and then it perked through the wedge pretty hard here. Not on huge volume, but there was a perk in volume as well. And this is where I grabbed my shares. We had this perk here, and I got in at 177, like I said. And then pretty immediately, I think 5 minutes later, we got this move. And it broke right through the initial high from the morning spike, and was just a really solid move. And my thesis was correct almost immediately, which I love. I hate having a thesis, getting in a trade, and then waiting and waiting. But this perk in volume here was kind of an indicator, and this perk you can see on the 5 minute chart was an indicator that a move was coming. And that's how I got in at 177, as opposed to, you know, getting in when it broke high a day at 215 or later even. I mean, there are a lot of people chasing this move up. But it's clear when you look at the 5 minute chart, you see this big tail. The real resistance to me was actually 180. And so when it perked through that and then dropped on this candle, I was able to get in at 177. I didn't take a huge position, only because it was already up almost 100% on the day, but I got a decent size. And I actually wasn't even tempted to sell. I sold a little into this candle here, approaching 250, only because I thought maybe 250 would be a little bit of resistance, which it really wasn't. And then I sold most of my shares into this candle here up towards 3. And I just decided to lock gains in. I was left with 1,000 shares at this point. So now I'm thinking big picture. There's a bunch of stocks squeezing for multiple days. This is the first green day. There's a catalyst. Friday's coming up. And so I really wanted to maybe add to this position or just swing the rest of my 1,000 shares overnight and see if we can get some more in the morning. So that's how I was able to stay back in this pullback. In retrospect, obviously, hindsight, I could have gotten rid of the rest at 3 again when 3 failed. But I decided to give it time. It pulled back here at about 1 to 250, and it made a higher low. So at this point, 250 was going to be my risk for the rest of my 1,000 shares, which it did break down below 250, and I ended up getting out. And I made about $3,000 on this trade between Interactive Brokers and Schwab. But it was a great trade, and this midday perk with some volume is a really good intraday long pattern. And I've been getting a lot of requests for intraday long patterns, so that's why I was getting into this trade as opposed to some of the others. But if any of you know Stephen Dux, which I'm sure many of you do, he has a whole video on this pattern. I'll post a link above. And he calls it the intraday perk pattern. And you can call it whatever you want, but it is effective. And once again, that's why I think it's so important to look at different time frames when watching a stock, and if you're deciding that you're going to want to take a position or not. You definitely want to look at multiple time frames. It helps paint a better picture for you. There's always going to be someone else looking at a different time frame. There'll always be someone else at the time frame above you. You know, there are people who trade on the 1 minute, 2 minute charts. There are people who trade exclusively on 5 minute charts. There are 15-minute chart traders, 4-hour daily chart swing traders. I mean, everyone's looking at different time frames. So it's really important to know what other people are looking at. You'll see something different. And in this case, the 5 minute chart confirmed what I was seeing in level 2 and what my feeling was, this feeling I was getting about the move. And that combined with the catalyst, combined with the state of the market, with all the stocks running, these are all the things I take into consideration when I'm placing a trade, whether or not I'm conscious of it completely. I always try to kind of see what the big picture is in the markets, what the patterns that have been working lately are, and trying to identify that early. If you can understand which patterns are moving early, then you know what to look for. And a stock that spikes almost 100% in the morning and then holds most of its gains, or at least a lot of its gains, and with these market conditions can certainly run. And this one proved it, beyond a shadow of a doubt. A huge move. So that's all I got for this one. I mean, pretty simple: spike, pullback, ramping action towards the resistance, perk through the resistance, and then I got in on a quick dip, and then it ripped. Locking in shares early so that I can be patient with the rest of my shares, selling off even more of my shares as it approached 3, that whole dollar mark, when the stock is already up 150, almost however much it's up on the day. And then setting a new risk at 250 and then sticking to the risk. And if you look at this chart, the next day it never got it back above 250 on Thursday, but you did get a good morning spike on Friday up towards 290, which got rejected. So I'll still be watching it Monday. There's always a possibility of a squeeze if things continue the way they are. But like I said, that's all I have for this one. I'm going to leave you guys with a quick excerpt from a great podcast called Chat with Traders. And I've actually listened to, I think, almost every episode, basically, and some of them twice. But this particular one, it's actually just the conclusion with a good trader named Dan Shapiro. And he has a pretty inspirational message particularly for the new traders, because trading's tough, and you'll go through some rough patches, and you have to persevere if you want to get through the hard times. So listen to that. I would definitely subscribe to that. Check out all the recordings there, and I'll catch you guys next week.
But guys, I'm telling you right now, if you want to be a trader, put in the tower, put in the long hours, put in the trial and error. Don't let anything bring you down, man. I'm telling you right now, people will doubt you. Your friends will doubt you. You will doubt yourself. I'm telling you, there's a rainbow out there, man. There's a rainbow out there. And the only thing, again, that's separating you from a guy like me is screen time. So if whatever you can do that's not going to prostitute your process or shoot yourself in the foot in the meantime, that's one step closer that you're going to live out your dreams and be a professional trader. So guys, don't give up. Keep working. Remember, you're the superstar, damn it. Not some random avatar on social media. It's you. You just haven't lived out your potential yet. Okay? Trust yourself and you're going to be great.